Let's also bring on board then Mayuresh Joshi from Angel Broking and try and put some fundamental sense to the markets. And Mayuresh, afternoon, a crucial earnings trading day, considering some of the large cap nifty names are slated to come out with their numbers. First, let's start off with Maruti. Does it seem like yen could actually play spoil sport this time for Maruti?
Afternoon, Aisha. I think clearly with the quarterly numbers coming through, you're expecting a 15.5% volume growth. Realizations expected to perk up as well. And again, I think the yen appreciation will probably play truant on Maruti's numbers if it continues in the same trend on a large extent on Q4 numbers. So really, I think Q3 will be largely determined in terms of how the operating leverage benefits have clearly come through, which will largely get offset with the kind of higher promotional spends that Maruti has done, the next showroom launches that it is doing. So clearly, I think expecting a stable set of numbers to come through. But the management commentary, both on what the progress has been in terms of volumes expected for the current fiscal and the next, along with what happened in the Gujarat plant, are key monitorables to be watched out for.
Mayuresh, then let's talk about some of the other earnings. What's the expectation when it comes to ICICI Bank? That too is going to be in focus today. Maybe asset quality pressures do persist, and it's by and large expected to be a bit of a muted quarter.
Afternoon, Navan. Oh yes, clearly I think the entire theme around ICICI Bank is asset quality. And clearly I think we have built in or penciled in higher provisions as well as in higher GNPA ratio. Clearly, with the kind of RBI directive that has come through, the exposure that ICICI Bank has, I think the risk of further slippages coming through, both from the restructured book as well as fresh slippages come through. I think that market fear is not ruled out. However, I think our take is that with higher provisioning probably getting penciled in by most analysts, higher GNP is getting penciled in, along with higher credit costs. I think if the numbers are a little bit better off than what the street is expecting, I think you might see a strong reaction on the upside for the stock. However, I think everything will boil down to what the management commentary is around asset quality. And again, I think that is the key number to be watched out for. Our own take is GNP is anywhere between 3.9 to 4%. We're expecting an NII growth of close to 10% on a year-on-year basis. And as I said, we're penciling high provisioning close to that 1,400 high provisioning close to that 1,400 odd crore mark.
Okay, that's the call coming in on what to expect from ICICI Bank as well. Let's just quickly take note of what's going on across the globe as well. European markets in focus, and I think it's been a bit of a tepid start to the European markets and down by about 0.2% for the FTSE. The DAX has taken a worse knock right now, and it's clearly in account with what the rest of the global counterparts have been up to. It's been mixed for the Asian markets. Overnight, Wall Street saw a pretty tepid session, and largely on account of the commentary coming in from the US Fed Reserve tempering the expectations for US economic growth. Atif Latif, Director Trading Equities and Derivatives at Guardian Stockbrokers, is with us. Atif, let's just have your opinion on what exactly you made of the US Fed commentary.
Overall, it seemed to be quite dovish. One key thing they said is that they're closely monitoring global economic and financial development. What they did is remove the wording that risks to outlook are balanced. So, interestingly enough, they said it's no longer reasonable, and they're not confident that inflation will rise to 2% in the medium term, but they do expect the economy to evolve in a way that warrants gradual increases. So overall, that does seem to have a sort of dovish tone to what the market was expecting. And then if you look at Fed fund futures, what we're starting to see is, because there's been a lack of conviction on the FOMC, Fed fund futures are now pricing in that there will be less rate hikes as previously anticipated. So overall, pretty dovish from the FOMC. And what that's done is weaken the dollar, bring some risk appetite back, credit started to tighten, and we do expect commodities to continue to push up.
Next up, Atif, would be the GDP data coming in from Japan and the Chinese PMI data over the weekend. What is the street expecting, considering these two are going to be some key monitorables with regards to what the global economic situation is like?
Well, again, interestingly enough, what we had last night is we had Japanese retail sales expectedly fall, which is obviously the day before the BOJ decision. And the main takeaway there is that inflation remains low despite all the effort from the central bank, and they're blaming that on mild weather and then lower car sales. So again, what we're looking for is sort of a pretty good environment for the central bank. Although they have said they're not going to continue to do any easing, we do expect them to come out and do some more QE moving forward, really to try and get the inflation number back to their target price.
Okay, Atif, let you go on that note. Thanks much for joining in and giving us a view as to what you make of the European markets. Gujarat Pipavav, by the way, is doing well right now on account of its numbers, whether... we just flagged those off that it's been an okay set of numbers where the standalone PAT is down about 40%, standalone net sales at 152 crore rupees. The stock, though, is continuing to hold out very smartly and, in fact, is gaining traction as we speak. That's a solid bounce up that you're seeing on Gujarat Pipavav. Of course, we will be getting in the management as well tomorrow to talk a little bit about what the outlook is and the reason for this kind of numbers, what the expectation is from the coming quarters. Mayuresh, Joshi is still with us, and since we're on the topic of earnings, any comment on Gujarat Pipavav's numbers? The PAT is down 40%, standalone net sales at 152 crore rupees.
Clearly, I think we don't cover it, but I think prima facie the numbers don't look encouraging.
Okay, but Mayuresh, let's talk a little bit about the overall sense in the market right now, and how do you expect the liquidity situation to shape up? Do you think that FIIs are going to continue selling on account of a lot of fears as to what the implications of China as well as the future prospects of what the Fed may do will continue to weigh down on us?
Oh, clearly, again, I think on the global scale, global concerns related to Chinese data points, what happens with crude, will create an overhang onto the markets. Clearly, I think the way the earnings trajectory has been so far, I think the numbers have been quite reasonable. But my fear is, I think, the second half of this earnings season, when you talk about PSU banks, when you're talking about a lot of these capital goods sectors, stroke infrastructure sectors, you're going to see a lot of strain probably come through. So clearly, I think what happens with reforms, what happens with budget, is going to keep the markets on its toes. So I think the overall the markets will continue. FIs probably are seeing some amount of pain as far as their overall equity portfolio is concerned worldwide. India still stands out within that pack. So clearly I think FI is pulling out, but again DIs are pumping in. I think the kind of flows that you're probably getting through SIPs and what you're reading through reports are quite substantial. So clearly I think there is this overhang on the markets which will continue and which will keep the markets soft for the next few weeks and months.
That's the call coming in on banks, but let's also talk about some of the other earnings which are expected today. And you've got to keep a close eye on ICICI Bank as well, which is going to deliver its numbers. Mayuresh, just a quick take on what's the expectation from ICICI Bank. The street is going into the earnings with weak expectations. Is there possibility of a surprise perhaps? Or do you think they're going to deliver on expected lines and there will be NPA problems as well?
No, clearly, I think with the kind of exposure that ICICI Bank has got towards the highly leveraged groups, there is every possibility that the bank will report higher provisioning and higher NPAs. Having said that, probably, as I mentioned earlier, we've penciled in higher numbers both on the provisioning front, on the GNPAs front, as well as on the credit costs. Clearly, I think the NIMs as well are expected to take a hit with the kind of 35 bips cut that we've probably seen in base rates for ICICI Bank in the month of October. So I think the street is penciling in weak set of numbers. Now, if they're weaker off than what one really expects with the kind of exposure that they've probably got to the over-leveraged groups, the stock might take a beating. So I think everything depends, as I mentioned earlier, on what kind of asset quality numbers are getting reported. But clearly, we are penciling in a weak set of numbers to come through. And I think the market is also expecting some amount of stress to probably remain on the balance sheet for this quarter and the next.
Okay, Mayuresh, let you go on that note. Great having you with us on the show with your market perspective. In fact, let's listen in to more big voices that we've interacted with today. Mahesh Patil of Birla Sun Life Mutual Fund believes that the near-term risk-reward favors large-cap stocks. He's placing his bets on defensives with enough growth valuations.
I think getting into a good quality